Hello everyone. Hello everyone. In this session, let's prepare an adjusted profit and loss account, which is a second step at the time of preparing a fund flow statement. So let's see what is given in the problem. So let's read out. Calculate funds from operation from the information given below as on 31st March 2008. So as on 31st March 2008, some information are given. So what are those? Net profit for the year ended 31st March 2008 is rupees 6,50,000. Gain on sale of building rupees 35,500, and goodwill appears in the books at rupees 1,80,000. Out of that, 10% has been written off during the year. Old machinery worth rupees 8,000 has been sold for 6,500 during the year. Rupees 1,25,000 has been transferred to General Reserve Fund. Depreciation has been provided during the year on machinery and furniture at 20%, whose total cost is rupees 6,50,000. So here we have to prepare an adjusted profit and loss account with the given transactions. So net profit for the year ended 31st March 2008, 6,50,000 is given. It has to be taken at the end, debit side end has a closing balance. Gain on sale of building rupees 35,500. It has to be taken at the credit side of adjusted profit and loss account. Next, goodwill appears in the books at rupees 1,80,000. Out of that, 10% has been written off during the year. So it means that the total value of the goodwill of that company is rupees 1,80,000. So out of that 1,80,000, 10% has been written off. 10% has to be deducted. So what is the amount of 10% of 1,80,000? That is 18,000. So 18,000 goodwill written off has to be written at the debit side of has to be taken at the debit side of adjusted profit and loss account. Then old machinery worth rupees 8,000 has been sold for rupees 6,500 during the year. So machinery costing rupees 8,000. Its value of 8,000 machinery has been sold for rupees 6,500. So value was 8,000 and the sold value is 6,500. It means there is a loss of rupees 1,500. So 8,000 minus 6,500, company incurred 1,000 losses on sale of old machinery. So loss on sale of old machinery has to be taken at the debit side of adjusted profit and loss account. Rupees 12,000, sorry, 1,25,000 has been transferred to general reserve. So general reserve transferred amount is 1,25,000. So that amount has to be taken at the debit side of the adjusted profit and loss account. Then depreciation has been provided during the year on machinery and furniture at 20%, whose total cost is rupees 6,50,000. So on machinery and furnitures, the depreciation has to be charged at 20% on its total cost. So total cost is rupees 6,50,000. So 20% of 6,50,000 is how much? 1,30,000. So 65,000, 10%, 65,000. 1,30,000 is the 20% of 6,50,000. So let's prepare the adjusted profit and loss account. So first, where go through the adjustment given. The first thing is profit. Net profit for the year ended 31st March 2008, 6,50,000. So that is the closing balance. It has to be taken at lost at the debit side of the adjusted profit and loss account. Here it is taken 6,50,000. Then gain on sale of building rupees 35,500. So it is gain on sale of building 35,500. So opening balance is not given, that's why it is 0 here. Opening balance is not there given in the problem. If it is given, it has to be taken at the debit side, credit side of the adjusted profit and loss account. Then goodwill appears in the books of accounts is 1,80,000 and 10%. So 10% of 1,80,000 is 18,000. So goodwill 18,000 is taken here. Then old machinery worth rupees 8,000 has been sold for rupees 6,50,000. So 8,000 worth rupees goods has been sold for rupees 6,500. So company with that transaction company has incurred loss. So that is loss on sale of machinery 1,500. Then rupees 1,25,000 has been transferred to general reserve. 1,25,000 has been transferred to general reserve. It is taken at the debit side. Then depreciation has been provided during the year on machinery and furniture. So 20% on 6,50,000. So 20% on 6,50,000 is 1,30,000 depreciation. So at the end we have to see the balances. So if we observe, usually the debit side amount will be more, that is 9,24,500. So the same amount is also written here, 9,24,500. And if we deduct this, the first one amount 9,24,500 minus 35,000, the balance will be 8,89,000. That is fund from operations. If the balance comes debit side, that is application of fund. Hope I understood this problem. You understood how to prepare an adjusted profit and loss account with this problem. Thank you for watching this video. Happy learning. Thank you very much. With this, I end this video. Thank you very much.